Good morning, everybody. Mike Vacchi, Princetontrader.com here for ntmarkets.com with your Tuesday morning pre-market webcast. Well, today is just a great big day in the market, at least in my opinion. Today is the day where one of two things can happen. Either the bulls can continue to push this market lower down towards the middle Bollinger Band with some more follow-through. They're on the edge of a couple of Fibonacci retracement areas here, the ones we talked about yesterday morning, the 85 to 87. Right now, the low is 89.5. That matches yesterday's Globex low. So the two lows matching lows at 89.5. So the bulls really have to, that's really setting up as a line in the sand for the bulls. And if they lose that area, they get down into 85. If they lose 85, then it's very likely you've got a little gap here that goes down to 83.75, that gap would be filled down at 83. Then you start looking at, whether it can rally off of this gap fill, and if it can, then you're looking potentially at the middle band. But here's the key. Every time, pretty much, that this has happened in the last couple of years, the bulls have rallied it. So I'm not trying to get you all bared up here. What I am saying is if the bears are going to take their next best opportunity to roll the market over, at least for the next couple of days. I mean, you have to understand the pullback to 53, to 1553, at the time was a 38% retracement of the whole move. That line now is up at 1579. So the fact that we're trading up at 1692, if you're a bull, shouldn't really be upsetting you too much. The thing that should concern you is that this entire rally from 1705 up, from 1695 up to 1726, so 30 handles, was Fed-based. Was based on the fact that there was going to be no taper. Don't try to work in any other economic Kool-Aid drinking perma-bull points into the rally. This was a Fed-based rally. That's what it is. You don't get to change the rules after the market starts to pull back. The fact that it cannot hold the level where it was trading before the Fed acted, which is 1695 to 1696, is a shot across the bow for the bulls. They should have been able to hold that level. That tells me that right now it's advantage bears for some more downside. Now, every time it's been advantage bears, the bears have figured out a way to screw it up. Maybe they will figure out a way to screw it up today. But we are simply too close to 85 and 83, probably not to go give those a test if 89.50 is lost. If 89.50 continues to hold and you want to get long, if you want to get long right now, go ahead. You know where you're wrong, which is below 89.5. So the market's giving you a nice little risk-reward deal. If you think we're going back to highs right here, go ahead. 89.50. You lose that level, then you know you're wrong. At least for a move down to 85 and potentially 83. You lose 83. If we close below 89.5 today, I think the door is open to 1672. Test of the, or I shouldn't say 1672. I should say a test of the middle Bollinger Band, which is your green line right here. And then that becomes high noon. Is this a market that wants to trade between the middle Bollinger Band and the upper band, or a market that wants to trade in the lower half of the bands as it was doing back here? Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. We are doing a webinar tomorrow on swing trading. Sign up. Come check it out. Come check out the room. It's going very well in there. A lot of people converting their subs into full subscriptions, and it's a fun place to trade during the day. I'm having fun, and we're getting a lot of great feedback. So come check it out and see if we can help out your trading. Okay, everybody have an amazing day. I'll be back tomorrow morning with another webcast. Trade them well.